In the metals quadrant, taking a look at the June gold futures, which fell in back-to-back sessions after having risen for the previous 3 consecutive sessions. The high today was 34.22, which was up a respectable 0.89%, but the low was 33.0240, which was down 2.64%, and with a little bit of time left in the future session, we're still down about 2.33%. On a weekly basis, gold is working on its first up week in the last 3, and with 1 trading day left, is trading up 2.13%, but the drop has been dramatic. At one point this week, gold was up by 6.32%. Market sentiment shifted yesterday and today to favoring risk assets. All 4 major U.S. stock indices were higher today, with the Russell being the strongest, up 2.34%. And the S&P and the Dow have stabilized above their 50-day moving averages, so sort of medium-term strength there. The Dow and the Russell have broken above their 50-day MAs, but we can't use the word stabilized yet for those 2 indexes. All this points to medium-term bullish sentiment for the equity markets and risk assets in general, which is bearish in a general way for precious metals. In addition, the FOMC met yesterday, and according to Jerome Powell, the current Fed policy allows for the Fed to wait for greater clarity on the overall economy before cutting rates. He cited heightened risks of both inflation and unemployment and significant economic uncertainty. He stated the Fed is committed to data-driven decisions and highlighted the importance of monitoring the evolving economic landscape. The market took this as pushing rate cuts further out, and higher rates is bearish for precious metals. The U.S. Treasury curve confirmed this, with yields between the 2-year and the 10-year rising double digits, pushing gold lower today.